Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the fourth video of investment account chapter. Now in this video we are going to focus on variable income bearing securities. We are going to understand how to do accounting of the investment when we invest in these type of securities, variable income bearing securities, where the income is not fixed, it is variable, it is changing. Yeah, so that's what we are going to see in this video, and we have to understand lots of things here really. So now let's start this video, but before doing that, let me just tell you what we have done so far in the previous videos. See here in the previous videos what we have done. In the first video of investment accounts, we have discussed the concept of investment, the meaning, and we saw accounting standard 13, which deals with the accounting for investments, and then we saw the classification of investment as per AS 13, current investment and long-term investment. And I've told you that the classification is not upon the basis of the investment itself. No, it is upon the intention of the investor. If investor decides to hold the securities for more than 12 months, if he has that intention, then that's long-term investment. If the intention of the investor is to hold the securities for less than 12 months, then that's current investment. And then the valuation also we discussed. The initial recognition would always be at cost, cost, and cost would include all the expenses that you have incurred to acquire the investment. While purchasing the investment, in cost you have to add up all the expenses that you have incurred to purchase that investment. And then at the end of the year, the subsequent recognition would be at lower of cost or market value, fair value, in case of current investment. But in case of long-term investment, you will value at the end of year at cost. But if the management feels that the reduction in the value of the investment is permanent, then what they can do is they can reduce the carrying value of the investment through profit and loss. And then in the future, if they feel that reason for the permanent reduction, the reason for the reduction in value is not permanent, it was temporary, if they feel that it no longer exists, then they can also reverse the reduction through profit and loss. Is that clear? Yes. So that's what we discussed in the first video. And then what we did, I've told you that we have to study this chapter by categorizing it into two parts: fixed income bearing securities and variable income bearing securities. So now in the previous three videos, we are completely done with the fixed income bearing securities. We saw all the concepts that are related with this. Now in this video, in this fourth video, as I said, we are focusing on variable income bearing securities, isn't it? Yes. So what we did in the first video was we started off understanding and going deep into fixed income bearing securities, where the income is fixed and it accrues regularly. For example, debentures, bonds, government securities. Then what we did was we took this example, this case study, to understand the whole concept of fixed income bearing securities, the due concept, the accrual concept, all these things. When you purchase, you have to pay the interest and all these things. And then we understood cum interest and ex interest. What is cum interest, ex interest? And then the cost of the investment also we discussed. As I said, when you purchase, you have to add up all the expenses, and when you sell, you have to deduct all the expenses from the selling price. Okay, now this philosophy will also hold here also, okay, in variable income bearing securities also. When you will purchase the investment, you have to add up all the expenses that you incur to acquire the investment, and when you sell, you have to deduct all the expenses. Okay, keep that in mind. That will be useful in variable income bearing securities also. And then what we did, we also try to understand the journal entries of fixed income bearing securities. You just have the logic. And then we started off understanding the format of investment account. If you have got debentures, bonds and all these things, fixed income bearing securities, will have three columns: nominal value, interest, and then this is the investment column. So we have understood all these things. If you don't know all these things, then please go back and watch the previous videos. Okay, and then this is the working note that you have to prepare for the calculation of the interest. When you purchase and sell, you have to calculate the accrued interest. So for that, this is the working note, and we discussed lots of things really in that video. And then we also solved two problems in the video number second and third. We have solved two problems of fixed income bearing securities. So if you don't know how to solve the problems of fixed income bearing securities, then please go back and watch it. So now let's start this video. Let's understand what is variable income bearing securities. Let's start this video. Now first, let's understand what does variable income bearing securities mean. See, it's very simple. The name says itself, the securities on which the income is variable, it keeps on changing year to year, it is not fixed. That's what variable income bearing securities is. Simple as that. Now what comes under this category? The equity shares. if you're investing in equity shares, then what do you get in return? In return, you get dividends. And you know, the dividends are dependent upon the profit that has been earned by the company in the year for which dividend is declared, and what kind of policy, dividend policy the company has, whether they pay high dividends or low dividends. Yeah, so it is dependent upon that. Dividend is not fixed, it doesn't follow accrual concept. Now what do I mean by the accrual concept? Now see, I have already told you this while explaining the fixed income bearing securities. I've told you that in fixed income bearing security there is a fixed rate of income, isn't it? 9% debentures. You are going to get 9% interest in a year no matter what. The income is guaranteed in case of FIBS, in case of fixed income bearing securities, right? It accrues regularly, that's also there. Yeah, as the time passes by, what happens? The interest gets accumulated regularly. Yeah, for example, let me explain you this. See here, let's say you are Mr. P, yeah, and let's say you purchase 9% debentures on 1st January, yeah, and then you wanted to sell these debentures on 1st March. So 2 months has been passed till this period, yeah, and you will get 9% interest, 9% interest. When you will get that, you will get it half yearly. Let's say you will get on 30th June and 31st December on the due date. Yeah, that's what happened. The company who issues the debentures, they always pay the interest on the due date. But now what will happen if you sell the debentures somewhere in between? You have held the debentures for these too many months, so it's like you are entitled to whatever interest that has been generated for this period, isn't it? Common sense, right? आपने क्या किया है, डिबेंचर्स को होल्ड किया है फॉर दिस पीरियड, सो जो भी इंटरेस्ट जनरेट हुआ होगा, इट्स लाइक एंटाइटल्ड टू यू, isn't it? So what you're going to do when you will sell the debentures somewhere in between the due dates, yeah, you are not going to get the interest from the company, right? So what you're going to do is you are going to ask the interest, whatever that has been generated till that period, from the purchaser. For example, if you're selling the debentures to Mr. Q, then you are going to ask him the market value, whatever the market value is, plus the accrued interest, whatever interest that has been generated till the date of transaction. Yeah, and you can easily calculate that because you know what is the face value, what is the rate of interest. Yeah, it's fixed, right? Rate of interest and then months into 2 by 12, simple. Yeah, that's how you will know exactly how much to ask from the purchaser. Exactly, you will know. Yes, yeah, simple as that. So that's what fixed income bearing securities is. Yeah, when you will sell between the due dates, you can easily do the transaction and you can easily calculate how much interest has been accrued, because here accrual concept is followed. But in case of variable income bearing securities, here the income is not fixed. It keeps on changing year to year because the income is dependent upon the profit and the rate of dividend that is declared by the company, isn't it? And it keeps on changing every year. Yeah, so it doesn't follow accrual concept. As the time passes by, जैसे time pass होगा, जैसे यहाँ पे interest generate होता है, it gets accumulated, it gets accrued, ऐसा यहाँ पे नहीं होगा, isn't it? So you don't know how much income has been generated or something like that. There is no concept like that here. Yeah, you are going to get dividend only on the the payment date, right? When the dividend is declared and when the payment date is announced, isn't it? So when you will sell the shares, yeah, you can't ask the dividends like this. Yeah, you can't do this thing in variable income bearing securities. Yeah, logic is different. Yeah, here accrual concept is followed and here the accrual concept is not followed, right? So now what will happen over here, that's what you have to understand. Yeah, how the equity shares will be sold and what's the treatment that you have to do from the accounting point of view. So see, for that you have to have a bit knowledge about how the dividends are paid by the companies. See, what the companies do is they pay the dividend of any particular year in the very next year. For example, the dividend of this period of 2020 will be paid in the next year of 2021. Yeah, that's how it works. In the annual general meeting of the company, which will be held in the next year in 2021, there the board of directors will declare the dividend of previous year of 2020. Okay, and the board of directors, they will also announce 3 dates: X date, record date, and the payment date. The payment date is the date on which the actual payment of the dividend will be done to the shareholders. Okay, that's the payment date. Then what's the record date? Record date is the date at which those who are owner of the shares will get the dividend, because that's the main problem, isn't it? The dividend is declared, the rate of dividend and everything, but now kisko milega dividend? To whom the dividend will be paid? That's the main question, isn't it? So what will be happening in the stock market is the shares of the company will continuously be traded. Yeah, A sold to B, B sold to C, C sold to D, something like that. Yeah, P sold to Q. So now the main question is who will get the dividend when the dividend is declared? That's the main question. So you cannot pay the dividend, the companies cannot pay the dividend directly those who had shares on the closing date. That can't happen. Yeah, and that doesn't happen. So what happens is the company will decide a certain specific date called as record date, and on that date those who are the owner of the shares will get the dividend. Yeah, simple as that, period. Easy? Yes. So that's what will happen. Okay, that's how dividends are paid. Dividends are paid in the next year, and those who are owner of the shares on the record date, they will only get the dividend, right? So from this, I think you can understand and you can feel that there are two cases here. There are two cases here. The case one is that you must have been the owner of the shares from the previous period. Yeah, either you have purchased the shares in the 2020 or you have purchased the shares before 2020, 2018, 2017, 2005, whatever it is. Yeah, so that's case one. You were the owner of the shares in the previous year for which the dividend is declared. Yeah, the dividend is declared over here, but it is of 2020. Yeah, so the case one is you were the owner of the shares in this entire period and you are holding the shares till here and you are getting the dividend. Yeah, that's case one. आप ओनर थे यहाँ पे और आपने शेयर सेल नहीं किया, आपने होल्ड करके रखा और जब डिविडेंड आपको मिल गया, right? That's case one. The case two is what? Even though you are not the owner of the shares in the previous period, you are purchasing the shares in the current year before the record date. You purchase the shares in the current year before the record date, तो क्या होगा? Your name will come in the registers. Yeah, company के register में on the record date your name will come. So if your name comes, then what happens? You will get the dividend on the record date. Yeah, in the payment date you will get the dividend, isn't it? So as you can see, there are two cases: post-acquisition dividend and pre-acquisition dividend. Now why is it called post-acquisition dividend here for the case one? See, that's very simple to understand. Here what is happening? Here you are getting the dividend of 2020 and here also you are getting the dividend of 2020. Yes, is that clear to you? Yes. But then when did you acquire the shares over here? You acquired the shares over here in the case one either in 2020 itself, yeah, somewhere in March or April, yeah, somewhere like that, yeah, whatever it is, in 2020 itself, or you might have purchased in 2017, 2016, 2005, 2010, yeah, in the previous years, yeah, and then you are getting dividend after that. Yeah, after you have been the owner of the shares, yeah, after you have been owner of the shares in the period for which the dividend is declared, then you are getting the dividend of that period only. So that's post acquisition. Acquire करने के बाद आपको उस period का dividend मिल रहा है, right? But then here in the case 2 what is happening? Think properly. It's very simple. In the case 2 you are also getting the same dividend of previous year only, of 2020 only, but you have purchased these shares in the current year. Yeah, you have acquired these shares in the year of 2021 and the dividend is of pre-period पिछले साल का है, of 2020. So that's why it is called as pre-acquisition dividend. Simple. So दोनों का logic is completely different. Yeah, the logic of these two cases are completely different. Here it's a revenue receipt. It's a simple revenue receipt. You were the owner of the shares in the previous period and you are getting dividend for that. That's post-acquisition dividend and it is treated as a simple revenue receipt and taken to profit and loss. But here what is happening? Here it's treated as capital receipt because it's not simple income. Why? Because you didn't own the shares in the previous period for which the dividend is declared. See the accounting treatment, how simple it is. In the case one, what you have to do? In the case one, you have to treat it as income because it is a simple revenue receipt. Treat it as income and take it to profit and loss. Simple as that. When you will receive the dividend, you have to pass this entry, cash or bank account debit to dividend income, and then take the dividend income to the profit and loss. Yeah, and then one more thing you have to know over here in the case one is that the investment account will be prepared when? It will be prepared in the year of 2021. So here you will have an opening balance. क्योंकि तुमने investment क्या किया है in the case one? तुमने hold करके रखा है till the dividend is declared. So of course in the next year you will have an opening balance, right? क्योंकि यहाँ पे इन्वेस्टमेंट था तो यहाँ पे भी इन्वेस्टमेंट रहेगा, क्लोजिंग बैलेंस रहेगा, फिर ओपनिंग बैलेंस रहेगा. सो देयर विल बी एन ओपनिंग बैलेंस ऑफ इन्वेस्टमेंट अकाउंट. सी द इन्वेस्टमेंट अकाउंट फॉर्मेट हियर. सी हाउ इट विल बी. इन्वेस्टमेंट अकाउंट on 1st April 2021, yeah, on 1st April 2021 you will have the opening balance and then you will receive the dividend on that. That's the case 1 dividend, post acquisition dividend. Yeah, so upon receiving that you have to treat it as income. In the investment account, where you are going to take that? In investment account you are going to take that in the dividend column. Your income has been increased, so dividend account will be get credited, right? By bank account, you have got the money, right? So that's how it will come. Simple. Dividend received, you have to treat it as income and it will go to profit and loss. The logic is simple. It's a normal income because you own the shares in the previous year, so as usual it would go to profit and loss. Simple. Yeah. Then come to the case 2. In the case 2, there will not be any opening balance. Why? Because you have purchased the investment, you have purchased the shares in the current year itself. You are not the owner in the previous year, right? So you have purchased it in the current year itself from some investor who owned the shares over here, right? So you have purchased in current year, so no opening balance. Yeah, and you have purchased it before record date, so you will get the dividend. So now upon receiving the dividend, what you have to do? Upon receiving the dividend, you have to deduct it from the cost of the investment. See, what you have to do? You have to deduct it from cost of investment. How you're going to do that? You have got the money, cash or bank account debit to investment account. You will credit the asset account to reduce it. Yeah. Now, why do we have to deduct it from cost of investment? The receipt which I am getting from the dividend, why can't I take it to profit and loss normally as I did over here? Why do I have to deduct it from cost of investment? Why do I have to reduce the cost of the investment? I didn't understand that. See, it's very simple. The logic for that is, see, when you purchase the shares in the current year, right? When you purchase the shares over here just before the record date and the annual general meeting and all, what would happen in the market? In the market, all the investors, the market as a whole, they will know that a dividend is to be declared soon, right? A dividend is going to be declared soon, because based on the previous history of the company, everyone knows in the market, right? And there are also some companies, you know, they will always issue dividends, always, in all the years. Not a year has gone by, they haven't issued dividend. Yeah, such companies are also there. So based on the previous history of the company, the market will know that as soon a dividend is going to be declared. So what would happen? The price will be inflated. So when you purchase the shares in the current year, you purchase at a higher price, at a premium price, at a inflated price. Price ज़्यादा था. क्यों price ज़्यादा था? क्योंकि market को पता था कि dividend मिलने वाला है soon. So demand बढ़ जाएगी, right? So demand will increase. Due to that, the price would also increase, right? So that price would include what? Price would also include a dividend element in that. It's like cum dividend price, yeah, cumulative dividend price. So what you have to do, when you will receive the dividend, you have to treat it as capital receipt and you have to deduct it from the cost of the investment. Yeah, investment account will be credited so that the asset can be reduced, the value of the asset can be reduced. So in the investment account, what you have to do, see, you have purchased in the current year in 2021, let's say you have purchased in, let's say on, you know, 1st June. So 1st June to bank account, you have purchased the shares, right? So the number of shares will come over here, and in the investment column, what will happen? You have got the asset, right? So asset has increased. So investment account will get debited and you have paid the money. So in the investment column, it will come. But then when you will receive the dividend, yeah, on the payment date, what entry you have to pass? The entry would be what? Simple. You have to what? Credit the investment, yeah? Cash or bank account debit to investment account. So investment account will get credited. Investment account will get credited. You don't have to take it here in the dividend column. Here in case 1, what you did, you took the dividend in the dividend column. Your income increased. If your income increases, then you credit the dividend, right? But here what is happening? Here you are reducing the cost of the investment. So investment account will be credited. Asset account will be credited and asset will be reduced. The logic is very simple. The price which you purchased the investment in the current year, in that price, there was a dividend element. And now upon receiving the dividend, you are reducing that element. Yeah, you're deducting the from the cost of the investment. Simple. So that's the logic of post and pre-acquisition dividend. I hope you're clear with this. It's very simple. In the case 1, you're getting the dividend, you have to take it in the dividend column. In the case 2, you're getting the dividend, you have to what? You have to take it in the investment column. Yeah, you have to reduce the cost of the investment. And that's why the WACC will be affected. You must have seen over here, affects WACC, right? Why WACC will be affected? Weighted average cost, while valuation of closing balance, WACC will be affected. Why? Because see here, this is not the cost of the investment. No, the actual cost of the investment is this minus this, because you are reducing, right? So you have to take a net figure, okay, while doing the WACC calculation of the closing balance. So you have to be very careful while doing the valuation of closing balance. You have to see the both the sides, debit side as well as credit side. Yeah, debit side as well as credit side, because here the cost is increasing and here the cost is decreasing. Yeah, the asset account has been credited, right? Yes. So you understand that, right? So you have to see both the sides of investment account while taking the cost of the investment in the WACC calculation. We'll see that while solving the problem, don't worry. So you get the logic, right? It's very simple. Yeah, this is the pre and post acquisition concept. Yeah. So that's what. And yeah, now we have to understand a few more things. Let's do that. We have to see the dividend concept, final dividend and interim dividend. Let's do that. Now see here, in the companies we have two different types of dividend, final dividend and interim dividend. Now what are these two? Let's understand that. See, so far past 15 minutes what we are talking about, right? Pre-acquisition dividend, post-acquisition dividend, all that, we were talking about final dividend. A dividend of 2020 which would be payable in the next year, in the year of 2021. Yeah, that's final dividend. Yeah, a dividend which is paid in the current year but it is actually of the previous year. That's final dividend, right? Then what is interim dividend? We have never heard about this. See, interim dividend is what? In anticipation of profit, the board of directors will declare a dividend of current year itself and it will be payable in the current year itself. That's what interim dividend is. Okay, interim dividend is the dividend of current year and paid also in the current year itself. That's what interim dividend is. Simple. Yeah, so that was the meaning of these two dividends. But then what is the calculation? How are we going to calculate the final dividend and interim dividend? That's the most confusing part for the student. See, it's very simple. Final dividend is of the previous year, isn't it? It is paid in the current year but actually it is of the previous year of 2020. So you have to calculate the final dividend on the closing capital of previous year. Whatever the closing capital was there on the previous year, equity share capital 50 lakh, on that you have to calculate the final dividend. Is that clear? Yes, that's the calculation thing regarding final dividend. Then come to the interim dividend. How will you calculate interim dividend? Interim dividend you will calculate on everything. Okay, so see, what will happen is after the closing date in the current year, the company will issue, company will make fresh issue of shares, right issue, bonus issue, and then further public offer, issue for cash. So due to that, what will happen? The equity share capital on the closing date will be 50 lakh. It will not stay the same. It will increase. Maybe it becomes 75 lakh. 25 lakh fresh issue has been made in the current year. So on that fresh issue, final dividend will not be paid. You know that, right? Why? Because final dividend is of previous year. So whatever capital was outstanding in the PY, at the closing date, only on that final dividend will be paid. Yes, not on the fresh issue. Not on the fresh issue of current year. But interim dividend will be paid on everything. Paid on the outstanding capital on the date of payment in current year. Because interim dividend is of current year, isn't it? It is of current year. So whatever capital is there in the current year, on everything, the interim dividend will be calculated. Final dividend will not be paid on fresh issue of current year, but interim dividend will be paid on everything, outstanding shares in PY as well as the fresh issue on 75 lakh. If 25 lakh was fresh issue, just for an example, right? So let's take an example, numerical example to understand this. See here, see, this is the 2020 PY. So final dividend is declared of 10% of PY. So it is of PY, so it will be calculated upon the closing capital of the PY. 10 lakh. 10 lakh was the closing capital of PY. So you will calculate final dividend, 10 lakh into 10%, you got the dividend, final dividend, right? But then what happened in the current year? This is the current year, 2021. On 1st May 2021, the company issued bonus shares of 2 lakh. 2 lakh worth of bonus shares were issued. So now what has happened? The capital has been changed. Yes, the capital is now, the total outstanding capital is 12 lakh. So now the interim dividend is declared and let's say it is 6%. So interim dividend will be calculated upon the entire capital outstanding. Fresh issue as well as the outstanding capital which was there in the PY. Both of those things. So 12 lakh, on 12 lakh, 6% is 72,000. Simple. So this is what interim dividend is calculated upon the outstanding shares in PY plus the fresh issue, the entire thing. Let me just show you the format. See here. See here, final dividend. Final dividend includes what? Only on the opening balance and also on the purchase. Because when you purchase the shares, from whom do you purchase? You purchase from the people who had the shares in PY. So that is what the capital that was already there in the balance sheet of the company. So you have to calculate the final dividend on what? On opening balance. That's post dividend. And on purchase that you have made in the current year, that's pre-acquisition dividend, right? So these two are what? Final dividend. And then interim dividend is calculated on everything. Bonus shares, right shares, everything what you have purchased, opening balance, on everything, interim dividend will be paid. Okay, yes. So that's what the concept is regarding the interim dividend and final dividend. I hope you are clear with this. It's very simple. So now let's see what are the treatment regarding rights issue, bonus issue and all. Let's do that. Now here we have the bonus issue. Let's understand what is the accounting treatment that we have to do in investment accounts if the company issues bonus shares in the current year. So see, what are bonus shares? bonus shares are the shares that are given to the existing shareholders from the company for free. Yeah, it is given for free. The shareholder, they don't have to pay anything. Yeah, there is no cost of acquisition, right? If there is no cost of acquisition, if it is for free, then you cannot make any accounting entry for receipt of bonus shares. Okay, except that you have to make a quantitative receipt in investment register. Yeah, you have got the shares for free, right? So the quantity of shares has been increased. So what you're going to do is, in investment account, you are going to take it over here on the debit side, 2 bonus shares, because you have got the investment, right? So 2 bonus shares, and you are just going to record it in the number of shares column. The quantity of the shares has been increased, but there is no cost involved in that. Bonus shares does not entail any cost. Okay, so that's why you're not gonna take anything in the investment column, right? And then one more thing regarding bonus shares is, see, bonus shares are for free, but actually if you see, they are not for free. Why? Because you're not getting bonus shares just like that. No, you're getting the bonus shares because you have already shares of that company here. Yeah, see here, you have opening balance and you have also purchased, so you have existing holdings. That's why you're getting bonus shares. Yeah, and you're getting that for free. So that means what? The cost of that, your original holdings, is being allocated to your bonus shares also. Yeah, so what will happen in VAC calculation? In VAC calculation, you are going to take number of shares, everything what you have purchased, the opening balance, bonus shares, everything. Yeah, the number of shares, everything you are going to take, but the cost of bonus share will be 0. Yes, the cost will be same, whatever your original holding is. Yeah, number of shares has been increased because of bonus shares, so the cost per share will get reduced. The cost per share will get reduced. Did you get that? Yeah, that's what. Because क्या कर रहे हो तुम? बोनस शेयर फ्री मिल रहे हैं, लेकिन क्या है, तुमको मिल रहे हैं बिकॉज यू हैव एग्जिस्टिंग होल्डिंग्स. सो इनका जो कॉस्ट होता है वो इन पे एलोकेट हो जाता है टू द बोनस शेयर्स ऑल्सो. ओके, so keep that in mind, right? So that's what bonus shares is. And then when you will receive the final dividend and when you will calculate it, you have to be very careful, okay? Because final dividend you will get it only on what? Only on the previous year closing balance of capital, right? So क्या होता है? Final dividend is only calculated upon the opening balance and the purchases you have made, the investments the shares you have purchased, right? And not on the bonus shares and the right shares, right? So always remember, don't take bonus share face value in consideration because it is issued in the current year and final dividend is of previous year. You know that already, yeah? So that's what we have to do in regarding bonus shares, okay? You just have to record it on the debit side and only in the number of shares column and not in the investment column, right? So that's what bonus shares is. And then we have right shares. Yeah, so see here, right shares. What are right shares? See, it is an invitation given to the existing shareholders to buy additional shares directly from the company at a reduced price. अब यहाँ पे right shares जो होते हैं ये free नहीं होते. Yeah, you have to purchase them. Yeah, so what the company will do over here is the company will give you a piece of paper. एक हक देती है, right? They will give you a piece of paper. With that piece of paper, you will be able to purchase the shares of the company at a reduced price. Yeah, for example, if you have 100 shares and let's say the ratio is 1:1. अगर आपके पास एक शेयर है तो और एक शेयर खरीद सकते हो, right? So if the ratio is 1:1, if you have one share, then you can purchase one additional share. Yeah, so that means what? You can purchase additional 100 shares. Yes, yeah. But then what some shareholders will do? Some shareholders will, they will entirely exercise their right. वो पूरा यूज कर लेंगे, right? They will subscribe to the entire issue. Yeah, they will purchase everything. Maybe they will take all the 100 shares. So what would be the entry for that? Investment account debit. Yeah, your investment has been increased and you have paid the money for that, right? So it would come on the debit side of the investment account. See here, to bank account, you have paid the money. Yes, right shares. Your shares has been increased, number of shares, and you have also paid the money. Yeah, reduced price, but you have paid something, right? So cost is there. Yeah, so you will take it in the investment column because your investment are increasing, right? Your asset is increasing, so investment account will get debited, right? But then what some shareholders will do, some shareholder, they have an option, right? Either they can buy the shares or what they can do is they can also sell the right. They can sell the right, not the shares. Shares नहीं बेचते, वो अपना हक बेचते. वो piece of paper जो होता है ना, with that piece of paper they are able to purchase, at a reduced price. That right, yeah, that piece of paper they will sell it. Yeah, maybe they will partially purchase some shares and partially, sell the right. That can also they can do. So what does that mean, sell the right? It means that they will sell that piece of paper to some other party. Now that other third party, what it will do? It will go to the company with that piece of paper and purchase the shares at reduced prices. Okay, that's what can also happen, and it's called renunciation of right. If you don't want to subscribe the shares, buy the shares, what you can do is you can sell your haq. जो आपका हक होता है, जो आपका right होता है, that right you can sell it off to someone else. Okay, for example, let's say now the market price is 500. Yeah, if you go to the stock market and purchase the shares of this company, you're getting it for 500, and the right price is 400. With the right paper, you can purchase the shares at rupees 400. Yeah, so what you can do, if you don't want to subscribe the shares, you can sell that piece of paper for 20 rupees. For 20 rupees. So if you sell that for 20 rupees, then that third party is still in benefit. Yeah, because for him it will cost him now 420. Yeah, with that piece of paper, what he will do, he will go to the company and he will buy the shares for 400, and he has paid to you 20 rupees, right? So in total he has cost of 420, right? So still he is in benefit, isn't it? Because if he goes to the stock market, then he has to pay 500. Yeah, so that's the thing. Yeah, and it's called renunciation of right. Okay, and the entry for that would be very simple. You're selling it off, right, for 20 rupees. So now what would be the entry for that? Entry is very simple. Bank account debit, you're getting the money 20 rupees to income account. Yeah, and you will take it directly to profit and loss account, and you don't have to take this in the investment accounts. Okay, you can take it over here on the credit side, but don't take it over here. Yeah, do it in the separate working note. Just show that, just calculate that and write their note that it will be taken to the profit and loss. Okay, because here this is dividend column, but you can also take it, but here you have to take it as income column, and you have to do it like that. Okay, because both of these things are same only. The dividend will also go to profit and loss, and this will also go to profit and loss, but the presentation is not good. Yeah, if you take it over here. So what you do is take this in the working note. Yeah, right there that this will be taken to profit and loss, and just get it over with. Yeah, so that's what you have to do with the right issue. Yep, if you purchase, if you subscribe, then it will come on the debit side to bank account. Yeah, and if you sell, then you have to make a working note and show the calculation and write a note down below. It will be transferred to profit and loss. Simple as that. Yeah, so that was regarding right issue. Now let's understand the format properly. Now here we have the format of investment account of variable income bearing securities like equity shares, and I think you're already familiar with the structure. 3 columnar. Yeah, face value or number of shares, whatever you want you can take, and then dividend column, amount column, and here we are preparing 2 accounts, an investment account and dividend account. This amount column is investment account, which is an asset account and has debit balance, and this dividend is what? This is an income account which has credit balance, right? So you're clear with that? Yes. And then the first thing that you're going to take over here in this investment account is what? The opening balance, whatever you have. Yeah, whatever shares you had in the previous year, yeah, you have purchased previously, yeah, it would be opening balance in the year of 2021, and mostly you will be preparing the investment account in the current year, right? Always. So that's what you will have an opening balance over here on 1st April. So it will come over here to opening balance, the cost and the number of shares, whatever you have, right? And then in the current year in 2021, if you purchase any shares, then where it will come? It will come over here. Investment account debit. Investments are increasing because you have purchased and you have paid the money to bank account. Yeah, so it will come over here, number of shares and the cost of the purchase. Yeah, now the cost of the investment will include all the expenses that you incur to purchase the investment. Okay, so you have to add up all the expenses that you have incurred, right, with the cost of the investment. Yeah, so that's regarding the purchase of shares in the current year. And then the bonus shares, I've already told you regarding the bonus shares. For the bonus share, we don't pay any money, right? We are getting that for free. So that's why we can't take 2 bank over here. We have to take 2 bonus shares, okay, because it does not entail any cost. You just have to take number of shares or face value. Yeah, that's all. So this will be empty. And then come to the right shares. Now for right shares, we pay the money, right? So investment account debit to bank. Okay, investment account debit to bank. You're paying something. So cost is there. Yeah, so to bank account, right shares will come. And then what? And then come to the dividend. Now the dividend is also of 2 types. The final dividend, post acquisition dividend and pre acquisition dividend. The post acquisition dividend will be calculated upon the face value of the opening balance. And always remember, dividend will be calculated always on the face value of the shares. Okay, face value, right? So post acquisition will be calculated upon the opening balance, isn't it? And where it will go? It will go to the dividend column. Yeah, because it is treated as simple income, isn't it? Revenue receipt. You have to treat it as income and you have to take it in the dividend column. See here, cash or bank account debit to dividend. That's what we have done over here. Yeah, dividend account is getting credited and buy bank account on the credit side. Yeah, so that's what dividend account is getting credited, isn't it? Yes, because we are treating that as a simple income. Yeah, but then we have pre-acquisition dividend also. Now pre-acquisition dividend is calculated upon the purchases you have made in the current year. Yeah, before the record date, whatever shares you purchased here in the current year, On that, if you receive the dividend, what you have to do, you have to deduct it from cost of investment. So that means what? Cash or bank account debit, you're getting the dividend, money is increasing, you're getting, your bank account is increasing, but then you are deducting it from the cost of the investment. So the investment account will be reduced, reducing the asset. Yeah, you're reducing the cost of the investment. So investment account will get credited. Yeah, see the amount column, investment account will be credited. Yeah, it will come on the in the amount column, right? Yes. So the investment account will be credited, and here the buy bank will come on the credit side. So it means you have received the money. Yeah, yes. So that's regarding the final dividend, and you don't have to calculate the final dividend on the bonus shares or the right shares, okay, because these are fresh issue of current year. Yeah, okay, final dividend is of previous year and it is calculated on the closing capital of the previous year, and in that closing capital of previous year these two things come, right? The opening balance and the purchases. क्योंकि जब तुम purchase करते हो ना, तुम किसके पास से purchase करते हो? You are purchasing from the people who had the shares here in the previous period. You're purchasing from stock market, right? So you're purchasing from the people who had the shares in the previous period. So on that shares you will get the final dividend. Okay, yeah. So that's that, and then we have interim dividend. Now interim dividend will be calculated upon everything, isn't it? On everything. Yes, on bonus shares, on right shares, on these purchases you have made in the current year, and also on the opening balance. So entire thing, entire face value you have to take. So that's what is interim dividend. Yeah, yeah, dividend is increasing, your dividend account is getting credited. Yeah, and then you're receiving the money, bank account to dividend. Yeah, that's the interim dividend entry. And then what we have, and then if you sell any investment, if you sell the shares, then what would be the entry? Simple, investment account credit, you are selling of the investment. Yeah, you will not have investment no more, investment account credit, and then you are receiving the money, so buy bank account on the credit side. Yeah, simple. So that's what, whenever you purchase the investment will come on the debit side, whenever you sell it will come on the credit side. Okay, right. And then we get the closing balance. At last we have to do closing balance. So the closing balance valuation will be according to FIFO or WACC. But if the question is silent, then always remember the WACC method is preferred. Okay, weighted average cost method. And then one more thing is there, whether it is current investment or long-term investment. Yeah, that's also there. If the question is silent, then you always have to do current investment. You have to think it is current investment unless otherwise mentioned. Yeah, so if it is current investment, the valuation is according to what? The lower of market value and the cost. Yeah, if it is permanent investment, if it is long-term investment, then what you have to do, you have to take cost, value at cost. But if there is a permanent reduction in value, then what you're going to do, you are going to reduce that through profit and loss. Yeah, yes, so that's there. And then at last what you have to do, you have to find out the balancing figure. Yeah, and where the balancing figure will go, balancing figure will hit the profit and loss. Yeah, the dividend balancing figure will also hit the profit and loss. Okay, here. And then if there is profit on sale, then it will come on the debit side. Yeah, because it's an investment account, right? It's an asset account. So if it's profit on sale, it will come on the debit side. If it is loss on sale of the investment, that will come on the credit side by profit and loss. Simple as that. Balancing figure. Okay, first value the closing balance, then find out the balancing figure. Yeah, so the balancing figure of investment account on the debit side is profit, on the credit side is loss. Okay, and then the balancing figure of the dividend will also hit to the profit and loss, because it's an income, right? Dividend, it will go to profit and loss. Simple. So see the notes over here. Dividend is always calculated on face value. If you purchase the investment, debit side. If you sell the investment, credit side. Yeah, if you're purchasing the shares, debit side. If you're selling the investment, selling the shares, on the credit side. Yeah, and then final dividend only on previous year capital, not on fresh issue. Yeah, final dividend will not be calculated upon the bonus shares and the right shares, only on the opening balance and the purchases you have made in the current year, because these shares you have purchased from the people who had these shares in the previous period. Yeah, so you have to include that in the previous year capital only. Yeah, it's from the previous year capital only. Okay, so on that also you will get the final dividend, right? So that's what, final dividend only on the opening balance and the purchases you made in the current year. And then interim dividend on all shares. Okay, the whole capital, because it's of the current year, right? So it also includes fresh issue also, the bonus and the rights. Yes, and then sale of right will go to profit and loss directly. Yeah, the sale of the right, you don't need to take it over here. Okay, you can take it in the separate working note. I have told you, yeah, that what you can do is you can write over there that it will be transferred to profit and loss. Sale of right will go to P&L directly, don't take it over here. And then profit and sale debit side, loss on sale credit side. Simple. And then never tell you this column, okay, this number of shares column, because it's just for convenience, this face value or number of shares, whatever you have. Yeah, so this is it. This is the format of investment account. Yeah, just be clear with the pre-acquisition and post-acquisition concept. And then there is one more concept that we have to discuss, but we'll see that while solving the problem. The right, there's one complicated thing about this right issue. We'll see that while solving the problem. Okay, So that's all. Yeah, that's all. Okay then, see you in the next video.